Bitcoin is now testing arguably the most critical level on the chart, a line in the sand that could very well determine the next major trend in the crypto markets. Some attribute this recent rally to the renewed hopes for a Fed rate cut, while others point to the easing tariff concerns and a noticeable return of risk appetite across the board. Meanwhile, Ethereum's long-awaited Pectra upgrade is set to go live next week. Could this be the spark that pushes ETH even higher? And in the stock market, it's been a massive week for earnings. Despite all the macro noise, giants like Amazon actually beat expectations amidst the tariff turmoil. If you haven't already, please be sure to like and subscribe to this channel so that you don't miss out on any of our daily uploads. Thank you all for tuning in here at DataDash. My name is Paul Sampson, and be sure to grab yourself a nice cup of hot coffee or iced, because we're breaking it all down right now. Quick shout out to our channel partner, Crypto.com, one of the top exchanges for trading crypto with low fees, deep liquidity, and a clean user experience. If you're interested, please check them out by using the link down in our description below. Ladies and gentlemen, Bitcoin has made it back to a very crucial level that we've been discussing for several weeks here as we were trading down around these lows. And once we reclaimed that ever so important $80,000 level down here, which was our yearly pivot, our high time frame average of price. I noted that we had a couple of things up in this region, one being a untapped volume level, which has already been tapped now. And more so, my attention is here on this gold pocket. And this is a simple gold pocket area, which is a Fibonacci retracement area zone derived from the overall all-time high down to the low. And basically means that of this entire move down, we've now since retraced 61.8 to 65% of this overall drop. And this is a crucial level on the chart that I've discussed for many reasons in the past, and we will cover that again today. Now, a few things are contributing to this recent move, one of which being the technical move that we just looked at here, and we'll kind of dive deep into that more in a second. A couple of news catalysts and fundamentals that go along with this move are investors speculate that the Bitcoin price not only has blasted higher already, but may even blast higher than it already is due to the Fed rate cut decision odds jumping up to 60%, which indicates that the Fed will actually make rate cuts in their next FOMC meeting, which is on the 18th of June. A few key takeaways here was that Bitcoin holds $95,000 as the Fed rate cut odds rise to 60% for June 18th as the U.S. economy slumps. This analyst also suggests that breaking 95,000 could push Bitcoin's price towards $100,000, which I think we could all agree at that point, not too far away, while dropping back below 93,000 may bring the 84K range back into the picture, which we're going to talk on that here in a second. And the idea behind this is that the Fed's rate cut will drive Bitcoin's price higher. Data from Cointelegraph Markets Pro and TradingView both show that Bitcoin was edging higher after the dip back down to $93,000 following the U.S. GDP data that was released. A contracting economy will likely prompt the Fed to lower the rates to stimulate activity sooner rather than later, and that reduces the yields on traditional assets like bonds, pushing investors towards Bitcoin and other risk assets. It's also interesting to note that Bitcoin also topped that $97,000 as strategy, previously MicroStrategy, hits 2025 highs ahead of their earnings amid capital raise speculation. So now that we've kind of taken a peek at some of the fundamental reasons that are contributing to this recent rise here, I did want to just kind of cover the technical aspect of this, a little reminder of how we got to where we are as well, at least what I was looking at as we entered into the month of April. And a fresh reminder is that this is how we began this quarter, which I highlighted this open range up above us. We had a point of control at the time, which was known as a naked point of control or an untapped point of control. And all that is the highest area of volume traded in a range. And likely when we re-enter said range, the price action will seek out that region. I highlighted the confluence around this area as it was also the gold pocket retracement, like I said, from that overall high to low, which is really a key region that we really want to be paying attention here for. Because this could set us up for one of two things. A, this is the area we want to get through for more sizable upside. For me, I'd be looking for a range rotation at that point, which is just simple as that, where we re-entered from the low and we'd look to rotate that range to the high, similar to as we did at the high down here or up here. And then we rotated said range back to the low. That all comes into fruition once we get above basically that $97,000, $98,000, start closing 4 hours daily candles as well. You could almost venture to say that this last high right here would be the real line in the sand for any more continued upside from this exact moment, now that we're here. And the reminder just again that we did come down in this region here when the tariffs, fears and woes and just concerns in general, the uncertainty at that point was at extremes. And we came down, we basically had a liquidity event, right? You come down, you sweep the lows where two things occur here. You end up stopping out people. Some will actually venture to exit even their holdings just because they're assuming that the market's breaking lower. You'll actually have people come in and actually try to short the market right here because it looks like a breakdown to the downside, only to come back up. We reclaim that $80,000 mark, right? That was for me the confirmation at that point that this was indeed a sweep of the low here. And then I was looking for a couple of things, one of which being that short squeeze that we were looking into right around this region here. And I brought that up in the idea that anyone that was getting into short positions around this region, basically late shorts, had their stop losses above these areas and so on, as well as at the time that we came down to make these lows here, we were putting in consistent low, lower high. This was a lower low. This area was potentially a lower high at that point, which once again, if anyone is looking in the terms of a trader and looking to enter short positions, this was another area they were looking to do so. And a lot of times you end that with what's known as a short squeeze, right? So you get the price action to squeeze higher, stops out everybody there. They have to cover their positions essentially. And then you get what is basically looked at as a pretty hated rally, right? But overall, we've done nothing but a really technical move to the upside. There's been a little bit of a turn in the fundamentals, right, that we were just kind of looking at. And everyone's question at this point is what's next for Bitcoin? So overall, I do actually anticipate more so that we're probably going to rotate this range to the upside. The only thing at this point that I will basically point out is that if we're looking at this daily time frame as we've broken into this range, kind of slowly pushed our way up, just hit huge resistance up in this area. Doesn't mean we can't probably come back up and kind of flirt around these regions for a few days and overall come back down and test back into this 89, maybe even say a dip below like 88, basically come back and retest these highs right here, this $88,000 to $91,000 region, and basically come in and put in what's looked at as a higher low, okay, as well as just a simple range break-in, back test of the low, look for that range rotation to the upside, similar to what we did right over here if we were looking at it in the same case, right? You broke in, you basically ran it all the way down to the middle here, we came back up, back tested the high, okay, before we ended up rotating that back down to the downside. Very similar here if you were looking at any sort of a trading pattern where you look for the breakouts and the back test of those patterns. This is a very similar example of that, right? You get the support and resistance. Essentially, it's just all horizontal, breakout, back test, and then we'd be looking for that. So for me, this region does signal a zone of caution just for overall moves to the downside, because we could also very well just really see that move melt from here. I wouldn't get too concerned until we're back down below 80,000, which unfortunately is basically back down by those lows. So at this point, if that's something you couldn't handle, because unfortunately I can't tell you which way the market is 1000% going to go, this is an area where you'd probably want to consider, de-risking or just paying attention as well, right? It's not a simple up only scenario, and but for me right now, I still lean more so to the bullish fact that we came down, we swept that low, we are back inside of our range, we've just come up and hit our major resistance. I'm looking for a back test, a throwback, however you want to look at it, towards this 91, let's call it 81 and 88 to 91,000, about a 4% little window down here. If we did see a move like that, I would not be overly concerned. But that's the area I'd like to see us hold, essentially not getting out of this range, right? To see Bitcoin lose this range now and start like closing daily candles down in this region, that would be the indicator to me that this actually ends up turning into a sizable lower high. And we may see a rollover, which we've discussed multiple times as well, right? Personally, I don't lean that way at the moment, but as the data does come in, I will have to interpret it as it comes, right? And the best example of that I have here is back in April of 2021. You had this high here. We came down, we put in our first lower low, essentially. You slowly grind it up for a few weeks back to a lower high is what it ended up being. This was also right into a gold pocket. So similar to what we are currently trading at right now, is the gold pocket of the current area from our high to low. We spent some time around this region, probably about a week or two, and then we ended up actually rolling over. So It is definitely a crucial area to be aware of. But in short, personally, I'm looking for potentially a little pullback in this region here, and then this would be where we'd look to start paying attention for this to be our new trend, okay? Because we've got this obvious downtrend here. This is where things start to look a little different. We've now come up and taken out a pretty substantial high here. Ideally, this is the next one we really take out, where what I mean by that is you see the price action come higher. Doesn't necessarily have to close candles up there. But overall, we've been putting in our low, high, higher low. Now we've got a higher high in this region here. You come back down, you make our higher low in this area here, and you continue up, and that's the beginning steps really to our continued trend that may in turn take us back up to the all-time highs. Macro resistance likely to pull back to this, looking at 106 next. If you've been finding value in these updates, just know that this is only a glimpse of what I share daily in my private community. From the recent Bitcoin rally off of 77,000 back up to 97K, to dozens of updates covering short-term trades, macro plays, and everything in between, I'm actively breaking it all down in real time. You also get full access to my trading academy, where I walk you through every tool, indicator, and strategy I use to stay ahead in these markets each and every single day. If you're ready to take your trading and investing to the next level and want to stay ahead of these big moves, the link to join is down in the description below. Ethereum has an upgrade called Pectra, which is going to be going live next week. And analysts are speculating, or at least this is indicating, that there is a potential price rally that could come along with it, right? Ethereum charts point to a price bottom. Will next week's Pectra upgrade spark an Ethereum rally is the question at hand. Some key takeaways noted in this is that ETH price has underperformed its peers during the current bull run, but gas sponsorship could lure developers and traders back to the network, is what they're basically insinuating. Ethereum's upcoming Pectra upgrade promises to improve staking efficiency and potentially increasing demand for Ethereum. Data suggests that the ETH price may have bottomed, and will the Pectra narrative reignite the bullish momentum? This update is going to include 11 Ethereum improvement proposals aimed at strengthening Ethereum across 3 dimensions, which is scalability, user experience, and staking efficiency. These enhancements could make Ethereum significantly more user-friendly, lowering the entry barriers, enabling dApps to sponsor new users, gas fees, and improving wallet functionality with less friction. Another positive aspect is that the option to pay gas fees with tokens other than ETH won't diminish ETH's role in the network. So with that being said, I also do tend to agree that there's a sizable amount of upside here for Ethereum, as we've seen a substantial sell-off compared to many others in the market, with, once again, as the article had stated, the underperforming price action, at least against Bitcoin and some other altcoins that we've seen over the last couple years, honestly. So weeks ago, we had come down and we swept those 2023 lows, taking out and erasing all the gains for over 2 years, just about, or almost 2 years at least. And then we came and we were hitting our head up against this 1670, which was the key region I was looking for to get back above with a daily close. And then that would insinuate that we would be flipping that big resistance into support now and be looking for a move higher here. So far, the price action has done just that. We've got a significant amount of daily candle closures above here. We did just come through and actually sweep this high, which, once again, a sweep, a liquidity sweep, a swing failure pattern is what it's known as on the shorter term time frames, or really on any time frame, but this is on a more shorter term time frame, where could lead us back into this region here. A similar thing with Bitcoin, right? If we're going to get just a small pullback, maybe that 4, 5, 6% back down to 91, 89K, I would imagine ETH in the market get a little bit of a breather as well. And the area I'm looking for Bitcoin or Ethereum to essentially come back to is going to be right back down to this region, that 1670, because similar to Bitcoin, we broke into this region. We've not necessarily back tested it, doesn't necessarily have to, but it would be a very technical back test down here. So assuming that maybe Bitcoin gets a cool down over the weekend here, or maybe the beginning of next week, Ethereum may go along with it. Then we have the launch of that new Pectra upgrade that could very well be a catalyst that does assist with the launch back up to these regions. And if we really zoom out to this is one of those things, once again, I've been pointing out how this is almost a stairs down situation, which we do get at times, don't get me wrong. A lot of times it's more so the stairs up, where you get those slow grinds higher and then you get a quick sharp drop down. So it's usually called the stairs up and the elevator down. Been more so joking around the idea that this could be a similar situation where it's a stairs down and potentially an elevator up situation, just because of the style of which this collapse has been, the sentiment around Ethereum as well. And it just, to me, it just marks a similar setup that we saw even with Bitcoin back in 2022 at the lows, about that 15,000, where we just saw a sizable run up and kind of leaves people sidelined and makes them guess, what's going on. And because a lot of times you get those really quick moves, obviously people will just tend to chase it. They're not interested when it's boring. And I do have two very key levels noted above here. Obviously there's several in here, so it's a little muddy here on the lower end, but we did put in a bullish harmonic pattern down here when we put in this low. Once again, I was looking to reclaim that 1670 for a little bit more bullish confirmation, which so far I think that we could, all agree that we've probably got it. And then the target of this setup here is a simple Fibonacci retracement from A to D, so basically from the high to the low. And those targets are the 382 Fibonacci retracement, which is just basically a 38.2% retrace of that move. The B point is the secondary target, as well as the gold pocket, which both of those actually align in this case. There's also a high time frame average untapped sitting right at that 382 target, which sits at about $2,425. So the two major targets of this overall setup are just that 2,400 and then 3,100 after that, if that region is claimed. We had a laundry list of earnings reports this week, which has contributed to a little bit of volatility as well. But oddly enough, even with everything that's been going on in the last quarter, Amazon ended up actually reporting better than expected earnings despite the turmoil of Trump tariffs. Tech giant has now exceeded expectations for 3 quarters in a row. But it is expected to report slowest revenue growth rate since 2022. Price action for Amazon relatively neutral on the higher time frame here. You did have a couple of spikes, both to the upside and the downside here, along with those reportings yesterday. As far as any continued upside from here, I'm paying attention for the untapped quarterly average here, which sits at $205. Currently, price is sitting at about $185 at the time of recording. Aside from that, really nothing too crazy from here, aside from us really, holding a pretty decent uptrend here when you're looking at low highs, higher low, higher high, potentially a higher low right here. Really be looking to see us push through this $205 region. And then we'll look to challenge back to these highs and see if this uptrend does continue overall. And when looking at the SPY, which is the ETF that's measured against the S&P 500, we were looking on the last update at the reclaim of the Q1 low, right? So we obviously had a similar sell-off with everything else, right down to the gold pocket area. We basically just tapped the high side of this. If you looked at this as a region more than anything, or the higher shelf, if you will, of the gold pocket. So that's where we came down to, right at that 0.618 region. Got a nice bounce back from that, and then since have reclaimed the Q1 low. So from here, that's just the next confirmation for me to seek some more upside here. If we come back down, that's kind of the line in the sand at the moment for any more downside. But while we're holding up against this region here, I'm targeting back up towards about 572. And then if we flip that area, I'm looking for that quarterly NPOC, which is an untapped point of control, very high volume level left over from last quarter. And that is back almost at the highs here. Thank you all so much for tuning in. If you enjoyed today's breakdown, be sure to like and subscribe so you don't miss out on any of our upcoming videos. Another quick thank you again to our channel partner, Crypto.com, one of the top exchanges for low fee trading and seamless access to the crypto markets. Please be sure to check them out using the link down in our description below. And if you would like real-time market updates, deep analysis, and access to my full trading academy, my private community is where I share it all. That link is also down in the description. Be sure to check it out if you're interested in becoming a member. I'll be sure to see you all in the next video. And until then, everyone, cheers.